Silver explodes upward 3.5%, and gold follows 1.3%. Today, we will explore why the markets moved up so sharply. Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity and motivate you by tracking my personal stacking adventure. Thanks to all my new and returning viewers. Please like and subscribe if you enjoy today's content, and ring that bell if you'd like to be alerted when new videos are available. I appreciate your views, but I really need your likes and subscriptions to grow this channel. Thank you for your support. Let's take a minute to review yesterday's market. Yesterday saw the U.S. Producer Price Index for April come in very hot, up 0.5% month on month versus expectations for being up 0.3%. The core PPI rate, excluding food and energy, was also up 0.5% in April versus expectations for being up only 0.2%. The March PPI numbers were revised down to minus 0.1% from the original reported 0.2%. The Fed Director Jerome Powell saw this as a mixed result, and the precious metals market moved higher. I was surprised by this move on what was really neutral to negative data for the possibility of lower interest rates. Today, the silver market moved sharply upward, over 3.5%, and gold followed, moving 1.3% at the time of filming. This move was caused by two factors. The first being a U.S. inflation report that came in just a bit cooler than expected, and the second, a drop in the U.S. dollar index, as well as U.S. Treasury yields. These factors allowed the silver and gold bull markets to surge higher today. This morning's U.S. Consumer Price Index report for April saw CPI up 0.3% versus the consensus forecast of being up 0.4%. The annual CPI April reading was up 3.4% and was forecasted at being up 3.6%. Traders and investors were thinking the CPI report might come in hot today, following the Producer Price Index report for April that was out Tuesday morning and ran hot on inflation. Today's CPI report falls into the camp of monetary policy doves, who want to see the Federal Reserve cut interest rates sooner rather than later. That scenario is bullish for precious metals from a consumer and commercial demand perspective. The key outside markets today see the U.S. dollar index solidly lower, dropping 63 cents or 0.60% respectively to 104.38. The yield on the benchmark 10-year U.S. Treasury note dropped to 4.356% after the CPI report at the time of filming. So what did I do today based off that news? I sold 164.3 ounces of silver. It was all generic, 2 kilo bars and 100 buffalo rounds. The silver to gold ratio dropped to 81 today, and I saw that as an opportunity to cash out of some silver and buy into some gold. I didn't buy today, but I do plan on buying on the next pullback for an even better ratio on the silver that I sold. My LCS actually offered me 2 Krugerrands or 2 Maple Leafs in trade for the silver. I thought that was a very fair offer, but in the end I decided to continue to fill my 1 ounce gold coin roll with American Gold Eagles or Gold Buffaloes. In the comments, let me know if you think today was a good day to cash out on some silver and possibly buy some gold in the future, or if I should have waited for even higher prices. Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minuteman 6, signing off.